example we're looking at today is a outdoor furniture company. This is a company that sells a dining suite that may go in your backyard, out on your patio, that sort of thing. It's $1,100 per unit. This is a unit that's imported from overseas, so the shipping price to come in is $300 a unit, and then there's $20 freight to actually get it from the dock to the household. As you can probably tell by now, this is an online ordering service, so as the unit comes in, it's shipped straight to the customer. In terms of the other costs in the business, there's your own salary in this. You pay yourself $80,000. You run your car and your phone and some other incidentals through this business. You have 2 staff members who deal with all the ordering, the follow-up customer service. This is a premium product, so it's a high touch point with clients. You have a small service office to just for some of your basic admin. Obviously, the biggest component of this is your online delivery with your website and those sorts of things. So let's take a look at your P&L, your profit and loss statement. So this is for 12 months from July 2013 through to June 2014. You can see here this is the number of units purchased per month. For this particular product, we have it dropping off in December and January. That happens in many businesses. Sometimes for some products, it's actually the other way around as you come into summer. So for this particular example, we're showing what it would be for most businesses, which is a bit of a drop-off over Christmas. And then you're looking to grow this business towards the back end of the year. So you can see the number of units starting to grow there. Your revenue per unit, you'll remember the sale price was $1,100. In here we put $1,000 because that is excluding GST. So your total sales revenue is $30,000. In July it's $50,000 for 50 units in August. The amount of cash your customers pay you, however, will be $55,000 in this case, because that includes GST. I'll get to the cash flow bit in a moment. The next line down shows your product purchase at $300 a unit. You pay it at the time when it comes in to the country, and then you've got the freight at $20 a unit, 2% effectively. So that gives you a fairly simple margin calculation. I appreciate there may be FX risk and some other issues around freight and shipping. This is a fairly straightforward template, just to sort of give you a general idea. You may need to tweak it to deal with some of those issues in your particular business. Coming down further, we've got then all the other regular costs in running a business. Your bank fees are a little bit more significant than normal because you take payment by credit card. We've got something for your other regular costs down here. We've put in a bit of an allowance for legal expenses that you may need during the year. As you can see, it's a one-off. Most of the other expenses are fairly regular. Obviously, we come down here to wages and salaries. You can see here that's the $80,000 for yourself, plus the 2 staff at $60,000 each. As you can see, your car is also in here, and plus your telephone. Your mobile phone goes through here as well. Obviously, we've got all the other insurances and that sort of stuff, workers' comp. So this is a template where the best thing to do here is to put in the costs about the time you think you're actually going to have them, as opposed to just dividing by 12. Things like stationery, you can divide that throughout the year. Things like workers' comp bills tend to turn up quarterly or annually. The best thing you can do for yourself and your cash flow is actually putting the bill in the month that the bill is actually going to appear. It makes it much easier to manage what bills you have and haven't received. Let me jump to the cash flow page. Before I do that, let's just have a look at the net profit before interest and taxes. So the net profit of this business is $30,271. Let me jump to the cash flow page. And the first thing we'll point out is the fact that your closing cash balance is $57,423. Why is that different from your profit number? This is a question that many people struggle with. I'm just going to walk you through how the cash flows work, and in the process we will answer that question. So to start with, the most important thing here, obviously this is a number you're probably very familiar with, which is what your cash balance was at the start of the period. So that's your opening balance there, that $15,000 on the 1st of July 2013. As you can see here, we've got receipts from customers. Your customers pay you online at the time of purchase. As you can see, there's that $55,000 there before, whereas the revenue was $50,000. So obviously they're paying you for the GST at the time they're purchasing your product. To keep this model simple, we've basically said we pay the suppliers the $300 at the same time as the purchase is made by your customer. Obviously, if that's a different timing, that's one of the things that has a significant impact on your cash flows. And so what you can do is, and I'll show you in a minute, how you can actually just move that around in this template. For all the other suppliers, these are all your other bills which aren't salary related. These generally you pay in the same month you incurred the expense. These aren't expenses you can normally get 30-day account terms on, all that sort of stuff. If we jump down to payments to staff, this is the salary you pay yourself plus your 2 staff members. You'll note here I've times it by 0.75. So what as a general rule I say is for your gross salary, the net salary usually works out at about 75%. If you have a more precise number that comes out of your payroll system, you just change that percentage there, and the rest of it will fix itself up. Okay, those are all the lines that pretty much correlate to your profit and loss statement. Let's start working through the ones that don't. So firstly, with the GST, this is where it's really, really important to know, to have your balance sheets up to date, to have your books and records and your bookkeeping up to date in a way that we know what the GST owed was at 30 June 2013. So whatever GST you owed on your balance sheet at 30 June 2013, that's the number you put in there in August. That's what you pay at the end of August. The rest of this sheet actually calculates. So this number here in November is, as you can see, the total value of receipts from customers minus payments to suppliers divided by 11. So from going forward we can calculate it, but this number here in August, it's really important you know what that is, and the best way to do that is to have up-to-date books every month. The same with the PAYG. This PAYG here is, it's picking up from the November number, but in August that is the PAYG you owed for June and July. You pay that at the end of August. This payment here at the end of September is the PAYG in respect to salary in August. If we go forward into November and December, you can see there the formulas all pick up, and again you can see I've got the 75% and 25% split between what's net pay and what gets paid to the tax office. If that's a different number for you, you just change those percentages around. Superannuation, again, very, very key. There's some big changes coming in July next year where the ATO are going to know whether you've paid this or not. It's really important you know how much you owe at any point. Basically, this formula here in October is picking up the superannuation earned by you and your staff for the 3 months before. This number here in July should reflect how much you owed at the end of June. As you can see there, it's these lines here, the GST, the PAYG, and the superannuation that tend to catch people out just because they're lumpy, they're not regular recurring, they don't necessarily tie into your P&L, and they're the things that tend to surprise people on the way through. As you can see, if we look at your net cash in and out each month, as you can see, we've got a net cash in August, even though you've paid some big amounts to the ATO. That was because you had a big sales month in August. September dropped right off in terms of revenue. Obviously, you still had all your fixed costs. You didn't have as big a bill to the ATO though, and so that means your net cash out was minus 5,000 at 649. That basically then gives you your closing balance. That should then reflect what's in your bank account at the end of that month. And all we do is we just keep rolling that forward. This amount here at the end of March is suggesting that your cash balance will only be 1,762. Given you have salaries, given you have rental bills, that sort of stuff, that's a very low number. Normally I recommend most people keep at least a month aside, which in your case would be 1 month's worth of overheads. If we look at the total paid in April for salaries and for overheads, that's 17,250. So that's dangerously low. What we'll look at next is how you can potentially fix that. Obviously, we're currently sitting here in November. You can see that in the future. Now is a great time to fix it. Going forward to the end of the year, you can see we're projecting you'll have cash in the bank of 57,423. The reason it started to grow is because your revenue, your cash receipts have started to grow. Obviously, we're now at June, and as I mentioned before, at 30 June you need to know, for this model to work, what your liabilities are. So let me just so what you need to be able to put aside is this is the GST you would owe at the end of August 2014. That is the PAYG you'd owe at the same time, and that is the superannuation you'll owe in July 2014. So that means of your $57,423 in the bank, you can keep 38,267 of it. So again, going back to the question before, why is that number different from the P&L? So this 30,271, there's two reasons. Firstly is you obviously started with 15,000 in the bank. That 15,000 had to go towards various liabilities, which obviously reduced the amount available, but it's obviously still not zero. As we roll forward, that opening balance rolled forward into that account, into that closing balance there. There is ways of proving these numbers, but at the end of the day, this spreadsheet, this template is the best way to just project what your cash is going to be at any point in the future, because what you need to know is where you have these danger periods here. Let's talk about that a little more and what you could potentially do in this situation. So this changed model it's a copy of this model here. All we've done is, so in September 13 we realised with our payments to product suppliers, we now do enough volume with these product suppliers to actually pay 30 days on account, as opposed to paying at the time the customers purchase. So what we've done is we've renegotiated that with that supplier, and that has effectively moved those payments. So that 8,800 there, which before was being paid out in September, is now being paid out in October, and that just continues to carry forward. And as you can see, from a cash balance perspective, at the end of March, instead of having 1,762, you've now got 10,882, which is a much better buffer against these bills that you have here the next month. If we go out to the end of the year, we're starting to get a fairly healthy bank balance. Again, these are the amounts owing for GST, PAYG and Super. And so at this point you now have $59,867 in the bank, which is a reflection of your profits and also money you can invest in your website development, etc., to grow your business further. I hope that was helpful for you in understanding how you can look at some of your cash flow techniques to improve your bank balances going forward. Obviously this is very dependent on an Excel spreadsheet. If that's something that's a bit of an issue, there may be some people in your world who are good at Excel. I would strongly recommend you get their help in how to drive Excel. It's a very powerful tool where you can make some fairly simple changes in this model, and it will then customise to your business. Some other tools that Azure has that can potentially help you. We have an ebook on help with tips and tricks to help manage your cash flow, which combined with this Excel template can help you very much customise this to your business. We have a business coaching package which very much gets into the nuts and bolts of all of those drivers for your business, which we do, which is a workshop. And for those of you who have businesses which are a little bit bigger, we have a virtual CFO package where one of our CFOs can actually come out on site and spend some time with you, and over time work with you to implement some of these strategies. I'd like to thank you for your time today, and if you do have further questions, please don't hesitate to get in touch with us. Thank you.